right? Long from here, and then they look for the exit up here. So they'll exit either here on this high or this equal highs up here. Once they exit, then they take the short from here.
Right.
And then
yeah, that's how I was. That's how I was seeing it also.
Yeah.
It's just that sometimes I'd be like skeptical because it's like I feel like you can always make sense of like of a build up, and like I feel like build ups can like cause a bit of like fear, because it's like you can always you can always make sense of like anything happening in the market, you know what I'm saying? So I feel like I do predict more than I react to price at times.
Yeah, exactly. So I mean, that's the reason why there's two versions. There's T1 and T2, because that's based on my own testing that two things can happen, right? But again, like, are you willing to accept the fact that if you take this short, it fails, that you have the confidence to actually take that long from here, and then have the confidence to exit here and then take the short? So now the question comes down to you, like, are you aware of both scenarios, right? So that was the short, but let's say you took a short here and your TP is here and his TP, and there you go, it's done. So that's pretty much fulfilled. That's a nice 6R, you know, unless you're aiming for more, then that's up to you. So it took out that low, and I'm just okay. So
and when something like well, I guess not this, but like say something like this happens, right? And at the time we didn't see this drop, right? At the time we just seen this up kind of, right? Like, do you make sense after it's like do you make sense that there's a POI that it's happened to after a move like this has happened, or do you like already mark it up? You know what I mean?
yeah, well, I mean, so we should already know that there's liquidity above every high and every low, right? Above every high and every low, there's liquidity. So there's going to be a POI above and below every high and every low. That's why you always get reactions. This is an unmitigated wick, was just above it. Stops. Yeah. There's a reaction. So yeah, there's, you know, they're going to be a nice little long. But again, now the question is it worth that 2R? Is it worth that 3R? Is it worth risking your capital, right? So that's why, you know, I don't praise ping pong that way, because some trades are like 2R, 3R. So it kind of doesn't make no sense. It's like, it's really worth your capital, right? If not, then why are you taking it? Because this is completely useless. Right. So there's a reaction right there. So if you want to know where the price react from, well, look to the left. There's an unmitigated wick, there's liquidity based on the rules and what we know on how we see POIs. There's the answer, right? Just don't question much. And my overall target, since we're coming from a higher time frame POI, where can we expect price to come into?
Yeah, at least
that external. Oh, yeah, exactly. So what's more high probable, the longs or the short to hold the shorts? I know I can take a long here, but I'm not surprised if that happens because I know the overall bias.
Yeah, high time frame bias to sell.
Yeah, and like this strong high should not break now. They should just be intact. It should hold. So if price is this, I know I'm looking for a short here. Keep on going down lower.
Okay.
All right.
All right. That's it.
Awesome. Going with questions.
Hey, I have a quick question. Are you still planning on dropping the rest of the course, or like you came up how you was going to do it?
Yeah, I'm dropping next week. I'm dropping all the advanced stuff next week. Yeah.
Nice.
Yes, like I'm just going to control you guys into the ocean.
Hey, Brian, do you mind if I ask a question?
Yes.
It's Lucy. Thank you for doing this. I really appreciate it. Could you go over your confirmation entry maybe? Because I'm struggling to know which low I should take. For example, when price reaches my, let's say M15 OB, and I want to wait for a confirmation on the 1 minute. Sometimes I take the closest low as my confirmation break, and it takes me out because it goes deeper into the OB.
Mm-hmm.
And if I wait for the structure low, sometimes it's so far down that I already miss like most of the move.
Yeah. So
how do you enter?
Yeah. So pretty much you answer your own question. So we enter the same way that we enter on on any time frame. So we see the market the same way, T1, T2. So for example here, so if you have the right POI, then that strong high that creates that breaker structure is gonna hold. So if we know that high is gonna hold, a strong high is gonna hold because you got the right POI, so price should not go higher. That's if you got the right POI, right? Now we look for T1 and T2, which is pretty much the QM. So all we're looking for is for the QM to form in that POI. There's a breaker structure. There's the high that got taken. In other words, the confirmation of this range from here to here. That's the inducement. What's just above this? Liquidity, short just above this, and that'll be your short right there. Now, there is at times, yes, because every scenario is different, that the breaker structure, I don't know, maybe let's say you don't see anything here until like down here. And then price just breaks and it does something like this and it drops. So now you gotta align everything together. First of all, is price coming into your premium? Yes or no? If it is, good, because it must come to your premium. If price breaks structure all the way down here, let's say, and it makes a pullback like this, and it drops, but it never came into your premium, did that make your rules? No. So you just don't worry about it. Don't take it. Like it just left. It's gone. So for example, here, let's see if this came to the premium. Oh yeah, I did. Okay. So this came to the premium. So this came in, took out this high, well, premium short. But let's say it didn't come into the premium. It just went just shy below the equilibrium. Then you're not gonna take that trade because it doesn't follow your rules. So you're again like it's 80%. So because it's 80%, and the way we trace 80%, the other percentage that's left, you're gonna pretty much either miss the trade or it won't follow your rules. And that'll be it. But we enter the same way. So we see the higher time frame as T1 and T2, the intraday time frame as T1 and T2, and your entry is going to be T1 and T2. And that's the beauty of it.
Right.
It's the same thing over and over and over again.
Yeah, let's say break structure again, even if it hasn't reached my premium, I could take the next break, right? Use the same entry. It should hold order flow until we breach the higher time frame low.
Exactly. So yeah, so for example here, so notice how every strong low is protected here, right? So that strong low is protected, that strong low is protected, that strong low is protected. So every strong low is protected. If you have the right overall, 1 PY, 2 bias, right? Then every strong low should be protected, right? Notice never broke, never broke, never broke, never broke. So you could stack entries until you hit your higher time frame target. So let's say you missed this short here. So you didn't take this one. All right, cool. Now remember, after a break of structure, here we have a major break of structure. After a break of structure, what happens? A new range is created. We got a strong high right there. Then price broke structure. Now we know that's a weak low. Now we got two scenarios, T1 and T2. That's a very obvious trap in front of you. And I mean, I say it's obvious based on my experience, but that's obvious. And then just above it, it's a breaker. You see that? So you missed the first entry. Here's your second entry. We took it on a break structure. We traced break structure once again. That's a T1. Your first target here, or take partials. But what's your overall target? Down here to this low. And that right there would have been another entry. Just like that.
All right. Yeah. All right. Got it. Yeah. Thank you.
Perfect. Will you enter trades on liquidity sweep plus confirmation entry without POI above and below the liquidity pool? Yes, you can enter without a POI. That's because you know that once price takes out liquidity, that's all it needs because the market is driven by liquidity. Like you don't need to see exactly a POI, but if you need to see one, that's on you, but you don't need to. Like if you know that's a trap right here, right? And you know that above it is liquidity, you can short here, put your stop loss here, and you'll be fine. You'll be fine. But you know, everyone has their own different needs, let's say, right? But yeah, like you don't have to have it. Like if you know and you're confident and you got experience, just short. Once it takes its high out, short. Price may come up here, then drop. While your stop loss is up here, you're still good to go. That strong high still hold it. It doesn't mean it's invalid because all of this is a POI. We just took the breaker because that's the closest thing to liquidity.
Brian, isn't a break and retest a form of trap, right?
Yes, it's pretty much a point of resistance. Yeah.
So like, wouldn't this kind of be like a trap? Because that's actually why I didn't
Yeah,
get
it is.
into the sale.
Yeah, it is. Yeah, because you imagine you got the break and retest traders here. You have the SMC traders here, supply and demand traders, and like I don't call it that, but I just call it that because you guys know it that way. So you got the SMC traders here, taking shorts, and there you go.
Yeah.
So it's just a pool liquidity, and that's where T1 and T2 come and play in. I mean, that's the beauty of it. Like we are able to see it and simplify in such a way that we like are just using a range. Do we use that open high low candle to determine the candle test for our trade? Internal liquidity is process for it to say we are waiting for internal liquidity to reach liquidity intended time. The open and high of the daily candle, it is important, but you have to break that daily candle down and see what's going on in that daily candle because the daily candle has structure in the beginning and at the end of it. But like we can't just depend on that candle itself. Like we have to see what's going on in there. And you know that's if I understood your question correctly. Please explain three candle formation again. Yeah, so three candle formation. Let me just delete this. So three candle formation is simply just three candles. Right. So we have three candles here. We got 1, 2, 3. That's a three candle formation. This is showing us that in the lower time frame, this is structured. It's structured. Right. So without going to a lower time frame, we know that this is structured on the lower time frame without going to a lower time frame. Right. That's pretty much all it pretty much is. It's just showing us that that's structured. So over here, we have the 1, 2, 3. This is structured on the lower time frame. 1, 2, 3. That's structure on the lower time frame. So without even going lower, we know that's a valid structure point. So for us, we want to have that to confirm our structure points.
Can you just show like an example of what's not a structural point, just so I can kind of differentiate between the two? Because
Yeah.
sometimes I'm looking at it and it's like I see the three candle formations like almost everywhere.
Yeah, well, I mean, they're pretty much everywhere is pretty much structured, but there is, for example, let's see, let's find something clear and obvious. Like this right here. I mean, we can, okay, this is a 1 minute time frame, but go to the seconds. If it allows us, probably won't, but let's see. I did, cool. Yeah. So here, puts up here. All right. So now this goes back to the question that somebody asked on the course. Hold on, guys. I need to plug in my laptop. Give me a second, or I'll die. Give me a sec. All right, yeah. So to go back to the question, how can we determine a valid structure point, and what do I mean by it must have a purpose, right? So if I ask you, whoever asked that question, did this point do anything, right? Did that point do anything?
No.
No, it didn't, all right? Did this low do anything?
Yes.
Yes, it took out this high, right?
Right.
That's a valid structure point. Did this high do anything?
Yes.
Yes, it took out this. So that's a valid structure point, right? So if this didn't do anything, this or this point here didn't do anything, that's not my structure point. So my current structure way from here to here in this time frame, this is my current structure point right here, here, and here, right? This is not going to be a structure point. So let's say, for example, price does this. It wicks above this. People are going to see as a what?
Break structure.
Exactly. But this high didn't do nothing. So that's not a structure point for me. It needs to have a purpose. It needs to take out liquidity and break some type of structure. So let's find another example. This one, this point took out liquidity. Valid structure point. Broke structure, pullback, kept going. Let's see. here. So this one. So we have the low and we have the high. This is not a low for me. Nothing. It didn't do absolutely nothing. So this is my low. This is my high. So price broke, made a retracement, and obviously didn't continue to go down lower for whatever reason, and it failed. But this is not a structure point for me. This is my high, and this is my low right here. It must have a purpose.
Okay, I got you. That makes sense.
Yeah, so this one, yeah, so this one took a liquidity at a structure point. It's in other words, a quote unquote false structure point is a way also to call it a failure swing. So however you understood it, failure swing, it didn't do nothing. That's pretty much what a structure point is, which is pretty much what a failure swing is. A failure swing does nothing. It just breaks structure. It tries to take that low out, but because it didn't do nothing, it becomes weak, taken, drops. But this is your high, this is your low. And then yes, of course, you drop down to a lower time frame, then you have internal structure in here. But in that time frame, that is pretty much failure swing. It has no purpose.
And wouldn't that be the T2, right?
Which one?
Once it break the structure, then fail to break another structure.
Oh yeah.
Structure, and then retrace fail. You know what I'm talking about?
Yeah. That would be T2.
Right. So it would be valid to take trades from the extreme when that happens, right?
Yeah. So, well, I mean, yeah. Again, it depends. Obviously, these scenarios. So, yeah. Let's say.
This is a smaller time frame, so I doubt it is going hold.
Yeah. So yeah. So if this, let's say it fails to hold, and let's say these two are like so close to each other, for example, then it comes to what as an extreme, and then that would be a target, because it gave it a reason to go up there now. I mean, just look, okay, the purpose of failure swing, just imagine how many people, right? No, just imagine how many people, let's say, are going to short here. They thought it came back to retest this support and resistance area. It came into a Fibonacci level, A to B. It came into a supply zone here. Imagine how many people are going short here. Just imagine. And then look, it does pullbacks. More and more and more liquidity is being built in. And next thing you know, up it goes. And then it comes, look, notice it takes out a actual real structure point, which is the inducement, the major one. So what happens to the retail eye? Oh, major BOS, 100% BOS. So what happens? POI for SMC. It gives them a little taste, right? Here you go. Next thing you know, drops, takes him out. And it's just a cycle repeats over and over again. And now, of course, this is a more complicated version of that, but yeah, that's pretty much what T2 is. It's just the entire logic understanding is just building up liquidity, just faking people into the market.
Another quick question on the fractal sense, like say this was like well, can you go back to the small time frame?
Oh, okay, hold on.
Well, it's fine. I'll just mark it out. So we had like this, right? Then we had this happen, right? And we broke. So say like we had this happen again, right? Would it be valid to take trades here, or should we still wait for this level?
And depends where you're coming from. So, like I said, every strong loss should be protected, right? So let's say that you're coming from, okay, let's say there's a high time POI here. That's a strong low. So you have all right to take a long here, right? Let's say a price broke structure, just for example. So let's say a broke structure, then your next area is going to be here. Following order flow, following the institutional order flow, that strong low should hold. So you can take a long here. The price breaks, it take out this low, make a strong low, that low should hold. That low should hold. Price then breaks to the upside. I don't know where it came into, but price breaks, comes down, failure swing, takes that low out right there, pushes away. But notice how it never broke a low. It was always intact. And it should hold. If you have the right POI, you have the right bias, every strong high will be protected and every strong low will be protected.
Okie dokie.
Where else can we see? Oh yeah, I mean, you can pretty much see this everywhere. Look at this. Tell me, why didn't it break these lows? It didn't. Why didn't it take out these highs? It didn't. They are respected until it hit a target. They are respected until they hit a target. All right. So yeah. We got 44 people in here, more than the last call. Guys, y'all can type a question or talk on the mic as y'all wish.
Well, so you said we had this right here, how we tap into this POI. But we swept these kind of equal highs, right? And we pushed down. Would this still be viewed as inducement? Because on the external view, like this is still part of the, trap.
Which point? This one here?
Yeah, because we kind of swept these equal highs, but we still is kind of making this trend line that we people get into sales here, but then they tap into this.
Yeah.
And it's sweep the last day lows too, whatever.
Yeah. So yeah. So pretty much, by the way that you've been explaining things, I noticed that you really do depend on equal highs and equal lows. Like that's why I call it basic liquidity in the course, because to me it's basic. I don't just depend on equal lows or equal highs. That's just a confluence. That's nice to have, but where is the actual liquidity? Above and below every high and every low. That's where everything's at, right? Equal highs, equal lows, they'll form, right? They're just pretty much, I guess I'll call it a byproduct, I guess, of the highs and lows. But every high and every low, that's where the liquidity is at. That's where the major liquidity is actually at. And notice this, create equal highs. Well, that's a high. That's a high. Two highs together, equal highs, right there.
Right.
Took them out. Right. So if I say I only depend on equal highs and equal lows, then I mean, you can imagine they're everywhere. So it's like, yeah. So which one do I choose? So just focus on the actual liquidity points, which is the highs and the lows. And then eventually, if you get to equal highs, that's just more confluence. So for me, I call it basic liquidity because, that's how I see it. I don't really depend on it by itself because it's everywhere. The market's fractal, liquidity is fractal. So it's very, very hard to depend on just equal highs and equal lows. And yeah, so that's why, T wanted to just simplify the entire process.
Hi, Brian.
Hey man, how you doing?
Hello.
Yeah, how you doing?
Can I ask a question?
Yeah.
First time, sorry, my English not that well.
Okay.
If I have a big area of fair value gap, big area, what can I do? Yeah.
So if you have,
Waiting to...
yeah, let me. Oh, look, here's a good example. So it's something like this. So before this happened, you will have this, right? Yeah. Yeah. So some people see it as, or they use it as a POI, which is fine. There's nothing wrong with that. But I personally, I want this to fail. I want it to fail. Some people use it as a POI, but I want it to fail because even though we're inside of here, people instantly expect to short from here. But what happens is price still keeps going, keeps crawling up on intraday structure, fails, then it makes the move, right? So you're looking for shorts right when price takes its high out, and then it takes you out again. And then you're shorting again in the middle of the fair value gap, and then it takes you out again. So I try to avoid things that don't make sense. It makes more sense for it to fail. It's much more high probable for it to fill. If not, I'm just trying to short in a big zone, then I don't know when it's going to fall. But I know when it fills the gap, that's when it's going to fall. So that's what I know. So because I know that based on my back test data, I feel more confident for that than to trying to guess where am I going to short this, in the beginning, in the middle, semi-middle, or in the fill. And then you start guessing. And then your whole psychology is messed up because your intraday tricks are not working. Because, well, we're in a big fair value gap, it must drop, right? But if you play this out, put the line on this. Okay. Once price came into here, well, actually, let me just highlight the entire box. This is going to look for your intraday time frames. Tell me, how many times did it tap the fair value gap?
Too much.
Yeah. So it makes more sense for, I mean, pretty much we're not counting this area here because it started from here. So it makes much more sense for price to fill it than to tap here, 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 and here. So when are you going to short? That's the question. Because all of that's a POI, right? So if it fills, now watch this. If it fills, not only does it fill the gap, but what's it line up with on your left?
Rejection block.
Yeah, rejection block, unticket wick. What's just below it?
Induced.
Ah, yeah. So does it make more sense to actually take the fill now that we have our rules in line? Look at this. We have a strong high, and then we have a weak low. Range high, range low. Retracement, tap, drop. So that's why I'd rather have the fill on every scenario.
Okay, please, can you zoom in a little? I want to ask about key level. The key level will be on the body of the candle or on the wick?
Yeah, well, that would depend on where your higher time frame POI is at. So they've imbalanced field price action was on the daily, it was right here. So I didn't move it. So this is where I'm gonna keep it. So I'm gonna leave it here, right? Right there in that area. Now, let's be real here. This is a key level on the higher time frame, right? And that's the fill. And that's what we want to expect because it's an imbalanced field price action. But let's say that this key level was a higher time frame order block, right? Most of the time, price will come in, tap into this, then drop. But all of this is alignment with the higher time frame key level. So that's a valid POI, right? But because it's an invalid field price action, it wouldn't make sense for price to come short and drop because that means it didn't what? It didn't fill. So because it's an invalid field price action, I want price to fill. That lines up with this rejection block. I'm not going to move that. I'm going to leave the key level. So the way it's going to look is going to be like this. The higher time frame will always give you the right overall POI. And that's how I will have it right there. So, I mean, if you were confident, you know, take a short from here, something like a 12 pip, then that would be your trade. And I know it sounds, you know, surreal, but if you test this, it's a real thing. Like even over here. So if we're on the 15-minute time frame, we have, in this case, a high on the 5-minute, I believe. It's a high, yep. Also equal highs. What's just above it? Imbalanced fill. What's lined up with that? Order block. 5-minute order block. What's on the 5-minute order block? A wick. So play this out. And there we go. So what price came into it? That will be your key level.
Okay. For breaker block, should we see a reaction from the order block before we break it?
Should we see reaction from the order block?
No. This one will be order block, right?
Yeah.
You say in the video to breaker block be formed, we should break the order block. Should we see before break the order block a reaction, then break?
Well, I mean,
or it's not important?
yeah, well, I mean, that to me personally is not really important because I know there's people that wait for reaction. If we have a higher time frame POI, then it will look like this. It will look like this. It would just be like that. But what's gonna happen if we go to a lower time frame? That. So the real answer is, to me it doesn't really matter. I mean, it's because it's fractal. On the higher time frame, it'll look like this, and it reacted. But if you drop down to the lower time frames, you will see it reacted like 50 million times, right? So to not overcomplicate it doesn't matter. That's a breaker. Right now, I do know that a breaker can hold for an extended longer time. So what I'm trying to say by that is that a breaker can be stretched out. So a breaker, let's see, a breaker can be used like this also, right? It can that is how a breaker can be used also, but I don't use it that way. That's not how I use it. For me, it doesn't make sense. But yeah, it can be used like that too, but I don't use it like that. But yeah, in short terms, it doesn't matter. Just have the liquidity below and above it, take it. Don't overcomplicate it.
Okay. Last question. This one, a strong high, right?
Yeah.
Then I wait for T1 to form like this. If here in small time frame like this, a strong high form here, will I take trade here or wait?
Yeah.
Here?
So if you have liquidity here, let's say you got Asia right here, and you have a strong high on the small time frame, and then your bigger strong high over here, then you're gonna take that right there. You're gonna take that right there, short here. Why? What's the closest PI to liquidity? This one. Now you have to be aware of the higher time frame range though. Price goes here, failure swing. What does this become now? T2. Then it goes. But the question is, are you able to actually handle this? Because a lot of people get freaked out, scared, because it didn't go their way. But no, but realize where you're at in the bigger picture though. You're reacting from that POI because liquidity is just that POI. So we're gonna take that risk. Right now, for me, like I mentioned, I like taking high probable setups. So I trade anywhere from like 1 or 2 trades a week. Yeah, sure, sometimes 3 or more, but high probability trades is what I like to take now. As I don't gotta trade much anymore. So here we have a 3-candle formation. That's a low. So there's liquidity below it. The closest thing to this is order block. And like that's all I have. Like I can't sit here and say it's gonna come all the way to this. I can't say that because this is the order block. That's the liquidity. That's the closest one. It's gonna come into here, and that's it. Simple as that. If I sit here and think about which pair is gonna come into, then I'm never gonna know. But based on the way that we trade and the rules, take the closest POI to liquidity, and just call it a day. That's it.
Thank you for your time and sorry for my English.
Oh, it's fine, bro.
Hey, for that same POI down there that you just marked up, will this be the inducement for this POI?
Yep.
Because this is considered the like 1, 2, 3 low thing, right?
Yeah. I mean, look at this. All the liquidity just. Yeah, it's just quite obvious. I'll take that for sure, 100%. Very obvious.
I have seen someone take this trade, but like his POI wasn't what you had up. He had marked up like something like this right here, and I had no clue how he entered that trade, but it wasn't how you got it marked up. He had like one like POI in here somewhere. I can actually send it.
Yeah,
I was like very confused on how he got into that trade, but he did it though. So.
Is there a way to refine it like even more like in this area to like if you for the seconds or something like that to get lower? I mean, if you wanted to.
As a confirmation entry or direct entry?
Confirmation.
Yeah, let's drop down. Yeah, sure. Like the market's fractal.
In the chat.
So if you're talking, I'm going to the second time frame on a 15/1 hour POI. I mean, I wouldn't personally, but if you want to go to the second time frame, let's see what we can find. Because you look for the same thing, and I already see the entry right here. Let me go to the 15 seconds. look. All right. So we have a break. We have a strong low. So every strong low should be protected. Price broke structure. There's a trap. Took it out. Came into whatever here on like the 1 second time frame. Long. That's your entry. We look for the same thing. Nothing changes. Well, I wouldn't take any seconds time frame on a 1 hour and 15-minute POI. Maybe on the 5 minute / about 15-minute POI, but not on a seconds time frame. But yeah, there's your entry right there.
All right. Yeah, because I trade pretty much similar. Like I've been trading this type of style, but I just needed to refine it. Just wanted to refine a little bit more. But yeah, it's clearing a lot of things up for me.
Awesome.
Yeah, can you look at that chart I sent in the chat? Yeah, because that was let me remove my annotation.
Yeah, guys, we got like 1 minute.
I did not understand that view at all. And that's one of the dudes that I like to watch, who kind of like do the little liquidity stuff.
Yeah.
I
look. Yeah. So I mean, like, I'm not gonna talk down nobody, but the only thing I can tell you guys is this. I know people here are from some very expensive boot camps because I know y'all's names. And they can pretty much somewhat agree with what I'm about to say is what you pretty much learn here, T1 and T2 is pretty much what these guys paid 5K for. So it's the same information, just in a different view. That's it. Simple as that, right? And with different names and whatnot, with extreme and decisional. But yeah, simple as that, to be honest. Right? Like, I've been inside all the boot camps, I did my research, and that's why I talk so loud and proud of the way I trade, because it's the same shit. So, but yeah, that's my opinion.
He charged like 1,200.
Yeah, people just do that. But anyways, we're not talking about that. Guys, I have like a minute left. Do you want to do another one, or like we good for now?
I'm good for now, Brian. Thank you so much, man. It's good hearing from you,
bro.
Awesome. All right, awesome. See you guys on the next call. And yeah, next call.
Thank you. That was good.